New credit inquiries during the home loan process can be a real pain in the butt for everybody involved. So, if you've already got a house under contract or signed your loan disclosures, you're in the middle of that working area of your purchase contract. You're still on credit monitoring. So, the report might have been pulled 2 months ago, but you're going to be under a credit monitoring from the time you go active until midnight, the day that you close. So any activity done on there where your social security number is affiliated with a credit pull, we are going to get an alert. I'm going to get it, the processor's going to get it, and the underwriter's going to get it. So everyone will know that there's potentially a new account that we need to add to your credit report and also to your list of debts. So that could absolutely impact your eligibility, your spending power, all of it. So it's a big deal. Don't get your credit pulled if you're house shopping. If you've gotten your credit pulled, we are going to reach out to you and then we're going to ask you to sign a document that says, yes, you took out a new debt, or no, you had it pulled and then you did not follow through with the potential new account being added. No matter what, we have to do that. If you did take out an additional debt, we have to get paperwork from you. And it can be a challenge because sometimes that paperwork hasn't processed and even become available right after it happens. Sometimes it can take weeks, which could also cause a delay. So usually if you've taken out a true loan, like a car or something like that, we're going to ask to see the terms and conditions of that debt. How much do you have to pay per month? What's the total balance? How long is it? And then we have to submit that to the credit bureaus and get it a rush request to have it added to the credit report. Everything has to be accurate. Everything has to match. So that can cause a delay and definitely legwork for you on providing more documentation to us. So that's kind of the short and the long on how that can impact your process. The biggest problem is when people do it the day of closing. So don't do it on closing day. Sometimes it's really hard to not go take advantage of those 0% financing options on furniture and appliances and things like that. But if you do that, even after we've closed the loan, 2 hours later, you go in and you do some shopping, you do the 0% financing, we're going to get an alert on that. You're going to have to come back and give us all the paperwork for that transaction. And we have to prove either that it happened after the closing, which can be very tricky, or we have to come back and re-underwrite the file and add that debt to your list of debts. So do not get your credit pulled, ideally, and definitely don't take out additional debts. So if you have more questions or a situation where maybe you blew an engine in your car and you have to do something, just call me. We can walk through it. We'll figure something like that out. But I just want you to be aware of the impact this can have on your process. So give me a call if you have any questions. I'll talk to you soon.